Welcome to the weekly market view from Capital Spreads. I'm joined once again by Bill Hubard. Nice to see you, Bill.
Thanks, Angus.
You're looking well, but you probably aren't feeling well.
No, not at all. I mean, the data we've gotten out of the last 24 hours, albeit was what we were expecting, is very depressing.
Yeah, I mean, mixed data from the Eurozone, and I suppose if you throw the UK into the mix as well, you've got the desperate retail sales from the UK, and then the sort of mixed GDP from the Eurozone.
Well, again, as you mentioned, the GDP was not a surprise. Actually, Germany came in better than expected, as did France. But I mean, it's just a question, and we've seen this now for the last 6 months, feeling that the contagion for the rest is starting to eat away at both of those countries. And as you just mentioned, I mean, here in the UK, we saw unemployment decreased, we had inflation increased, we had Sir Mervyn confused, and so the UK consumers said, we ain't doing nothing.
Yeah.
Retail sales collapsed.
Exactly. He didn't paint a particularly bright picture for the UK economy. But what is going on with that unemployment? Because the thing is that jobs are being created, right, and we're working longer, according to the stats. Why on earth isn't output going up? Because, are we just sitting at our desks doing nothing? Or
it's hard to say. I mean, my feeling is, I think we have a lot of kitchen industries, people that were laid off, and maybe 4 or 5 of them get together and will start a mini this, that, or the other. And I mean, I would expect probably in a number of places in the country that Joe Bloggs has come back after being unemployed for 2 or 3 months and has found a job. Now, he's probably being paid considerably less, but it's a job.
Yeah.
So he's at least hoping that the job will continue. And I think one of the big problems that we have, and I know this is going to sound horrific, is we don't have enough inflation, okay? So companies are not hiring people, they're not getting order books, because everybody said, well, I don't think I'll buy that. We saw that yesterday, today was retail sales. I think I'll wait. Whether it's wait till next month, Christmas, the new year, and people just aren't buying.
It's the same thing in the US, of course. Businesses are putting things off because of this great fiscal cliff. Now, of course, this is the topic of the day, and obviously the nearer we approach the end of this year, the more intense it gets. We saw this last year with the ceiling, the debt ceiling, Democrats versus Republicans, and never got anywhere. And so markets are plunging, and it just seems like all buyers are dried up. I mean, what do you feel for the indices at the moment? Do you think that they might turn around or head lower?
I guess my comment would, if they're going to turn around, are they going to hit a fiscal cliff? And I mean, like one of your competitors, ICAP, reported horrific earnings yesterday. There's no volume, okay? So how can you make any money if nobody's trading anything? And as I say, I think the problem we got now is we're running out of days. 2 weeks from now, we got the 4-day weekend in the States with Thanksgiving, and then we're going to have Christmas and this, that, or the other. But I mean, with the fiscal cliff, fingers crossed that all of a sudden, as even Governor Romney said in his concession speech, let's put politics aside. We're talking about the American people, okay? And let's look towards that, okay? And then the same thing over here about the British or the individuals, okay? We saw that with the demonstrations in half a dozen cities throughout Europe yesterday.
There still doesn't seem to be any consensus though across the pond, because otherwise markets would feel a bit better for themselves. Or do you think that the downside move at the moment is being dominated by a fiscal cliff, or it's Eurozone crisis?
I have to feel it's Eurozone crisis, because even Sir Mervyn yesterday was inferring that we're doing the best we can here, but there is a problem with 40% of our exports go to the Eurozone. The US has got the same problem. And I think one of the things that probably didn't help going back to 2010 was, I'm sure, whether it be the Eurozone, the UK, or the US, everyone said, well, we're not really going to be concerned. China will bail us out. Well, China hasn't bailed us out. And so now it's a question, we've got to bail ourselves out. So it really is a question of, I just have to feel optimistic that this fiscal cliff will be not resolved by midnight on the 31st. But I mean, individuals have got to feel, stop taxing me to death. And I mean, that's what we're seeing with all of the austerity demonstrations. Whether you go to Greece or Italy or Spain, my life now is half of what it was 5 years ago. And the people in the States are feeling the same way.
Yeah. So the austerity really is starting to bite. So what does that mean for the euro? I know that earlier this year, a few months ago, things were looking pretty dire. Euro was heading lower, euro dollar. You made it call 118 or 115, I can't remember. But where are you thinking now? Because it's still a pretty negative.
Well, yeah, but I mean, last I looked, we were just a couple of P off of 128 the figure. But is this the anticipation? Well, because 6 weeks ago with the OMT, we saw a massive move in bonds. Then we saw a massive move in the euro, about the 130 level, feeling that any day now, Spain's going to say, "Hola, Senor Draghi, we want the dinero." So, I mean, I think the market is feeling that Spain is getting closer to asking for the bailout. And it just may be a situation of, as you mentioned earlier, with no volumes, because like whether it be the euro, whether it be the S&P, it's the 50, the 100, the 200-day moving average. So a lot of these stocks, a lot of these indices, and like the euro, are very close to technical levels. So maybe guys that just, with their robotics or algorithms, just saying, we'll do a little bit of this and do it. I mean, I'm still, even 125 towards the 123 level for a year. I just can't. I can't feel justified in my mind to be looking to buy the euro at the 128 level.
Yeah, but as you say, it's sort of being propped up by this potential for a smash bailout. Okay. Well, thanks very much for that, Bill. It's great to catch up and great to talk. Thanks very much indeed.